From time to time, you hear Steve Peasley talking about portfolio checkups in locations in the San Francisco Bay Area, Los Angeles, and Orange County, and that kind of leaves you out if you live in Orange County, Florida. Well, don't feel left out. If you would like to take Steve up on his offer to look over your portfolio and give you a health scan, it can be done on the phone. You can send copies of your documents by fax, email, or regular mail and join Steve for a one-on-one conference call. If you're interested, just go to investtalk.com or call our 24-hour InvestTalk answer line at 888-99-CHART. That's 888-992-4278. And thanks for listening to Invest Talk. It's an attention-getting promise. Double-digit dividend yields offered by real estate investment trusts. But wait, industry experts caution investors, beware of REITs offering the highest yields. Can they be sustained? That's just one of the topics on the table today on Invest Talk, made possible each day by KPP Financial. It's 1 hour about your money, reducing risk and making it grow. It's Invest Talk, dedicated to the idea that you can do better than the average investor. And now, here's Portfolio Manager Steve Peasley.
Welcome to Invest Talk, everybody. This is Friday. Thank God it's Friday. TGIF. Friday afternoon. Actually, it hasn't been a bad market week at all. A lot of earnings came out. A lot of economic news came out this week. So it's a very interesting week. We'll talk about that in a second. It is April 17th. April 17th, Friday. And, of course, all listeners are welcome, podcasters, investtalk.com listeners, and on the radio. Thank you for tuning in. We appreciate it. Our number one mission is to help you protect and grow your retirement funds and make for you a more comfortable retirement, whatever you're going to do in retirement. A lot of people work. I work. I mean, it's working in retirement, but you're working what you want to do, not what you have to do. That's what your goal is, to do things that makes you happy. That could be working or not working. Doesn't matter. The trick is that you have the freedom of choice. That's what we work toward. Now, whether we're looking for the bottom of the market or wondering if we're in a bubble, investing in the market still depends on understanding your options, using tried and true principles, at the same time keeping an open mind to the new stuff coming down the road. Tried and true principles are buy companies that make money. Try to buy companies that are in an upward moving price range, okay, not a downward. Don't try to guess at the bottom. Wait till it hits the bottom, wait till it starts to come off the bottom, and then get in. Look for strength, not weakness. You want to buy strength, not weakness. Buy strength. Well, what will that do? It means you won't be able to pick the absolute bottom. Anybody that tries to pick a bottom usually fails. So that means you'll be won't be fully invested at the bottom. Okay, so yeah, that's okay. You can never guess the bottom. You can never guess the top. It just is impossible. So that's what we're going to do. Try to keep you up on this new stuff coming out. Try to figure out where we're going, where the market's going, where the economy is going. And maybe we can make some sense of how we should invest our money. Now, also, obviously, I want to hear your questions. Not what I'm going to discuss, but what do you want to talk about? So give us a call. Time is right now. We're here for you, 4 to 5 p.m., Monday through Friday. That's Pacific Coast time, 4 to 5 every day, Monday through Friday. Of course, looking for safe harbors in the stormy market that we have. And, we've had, if you remember right, now people have very, very short memories. If you remember right, we had 15 or 17 straight down days before the market decided to turn around. And those were very steep down days. The market for the year is still negative, except for the NASDAQ. So if you had the top 100 NASDAQ stocks, and that's all you had, and depending on which of the 100 stocks you had, not even all of them, but if you had the ones that were rising, you'd be up for the year. Or if you just bought a NASDAQ index fund, you'd be up for the year. That's all you were in. The S&P 500 and the Dow are still down for the year. They're not in positive territory. So Don't get overly excited. We have had a bear market for the year. We're still in the bear market, in addition to the bear market of all last year. So it's not a bull market yet. Now we have a bull move from the bottom, very sharp move from the bottom. I'll give you all that. But don't think we're up for the year. We're not. And here we are, middle of April. Now, our talking point today are about REITs, real estate investment trusts. What are they? REITs. Now, the thing that people like about REITs, and I like about them as well, is the dividends they throw off. That's the main reason why you want to buy a REIT, a real estate investment trust. The dividend, very attractive. And so that's what we're going to talk about. That's our talking point for today. CNNMoney.com has a report, which we're going to refer to. High yield REITs come with a warning. Come with a warning. That's the talking point. We'll open up a discussion for you on REITs right now. You can call, or if you want to buy something else, we'll talk about that too. Real estate, I actually think real estate's, at least the housing market, is now trying to find its bottom, and in sales of real estate have taken off. I mean, huge increase in sales, okay, from the bottom. We won't see that statistics for another month or two because it's always a lagging indicator. You're going to see a lot of refinancing. Refinancing is up, I think, up about 45% from a year ago this last week. Okay? So, that's quite a bit. Quite a bit. A year ago, this last week, we're up 45%. Sales have increased. Sales are increasing. Not in new homes, everybody. It's the existing homes. Why? Because of all the foreclosures, which are still increasing. The banks want to get rid of those properties. They reduce the prices. They make it attractive. And prices and interest rates are such a point that affordability of a median house now is very reachable for many people. That's been we haven't seen that for a number of years. At this point, it's extremely reasonable for the average earner. Of course, you still have to have a job. That's always a problem because we're in an economic recession and jobs are disappearing. But for those people who have jobs, it's a great time to be buying real estate. What did the market do today? It struggled. You notice the market's been struggling every day this week? Well, one of the reasons is because we've had a lot of earnings news and a lot of economic news for the week. This is where earnings season, right in the heart of it this week. But we had some very good news on banking. I think everybody thought banking earnings for the big banks this week were going to be very, very tough. They're going to be, negative, missing their numbers. And lo and behold, they all met or beat their numbers. So that fooled the market. I think the market was ready for a pullback this week, expecting some bad news on that end, and they didn't get it. But we did have bad news on the economic front. The good news we had was inflation news came out, no inflation. Okay. Good news we had was about refinancing and sales of houses. That's good news. But we have industrial production down, retail sales down. We had a Philadelphia Fed survey down. But everything wasn't down. Well, not everything. A lot of things weren't down as much as we expected, and some other things were down more than we expected on the economic front. But remember, almost every one of those statistics is backward looking. So the stock market today had to deal with some information that wasn't too bad, but wasn't that great.